Good evening, everybody. Okay, I guess we're in the fall. I was telling somebody, we got guests here from Arkansas, and it's like a spigot. That summer weather comes right up until Labor Day weekend, and the day after Labor Day weekend, it inevitably turns into fall. Just one day, you can feel the whole gone from summer to fall. So we're enjoying the cool weather. All right, there is a trend breakout here. There's kind of a wedge formation coming up, and either the Dow is going to break up to the upside or break to the downside. And obviously, it broke to the downside. Now that in itself wouldn't say, well, maybe maybe we still got upside as long as it stays above the 50. But the fact that the transportation index also sold off today, the S&P 500 came back to the T-line area, and the NASDAQ, even though it was trading positive on the day, you can see after the doji gap up how it's been very indecisive at that point. So we're still in an uptrend, but it's not a very powerful uptrend. So you add that to the analysis of the Dow breaking this wedge formation to the downside. This gives you that much more, inclination to say, all right, maybe they're selling it off again. Now, they've sold it off a few times during this uptrend. Sold it off here, came back up. Sold it off here, but notice what it did not do after it came up this time. It didn't get to a new high. So that's kind of an alert, I guess, to say that there wasn't as much strength as in this next move. So we've still got a few good ones. We can see where AEHR did the J-hook pattern breakout. And again, 2 plus 2, if they do a J-hook pattern right here at the breakout level, the implication is they're still taking this up. They're that concerned about that resistance level. TVTX came up off the best friend, or the message. Looked like it was backing off on Friday, which again gives us two opportunities. If they traded this lower today, you would have closed it out. The fact that they gapped it back up, did a trend kicker type signal back up through the T-line, tells you you've got more now of a bobble breakout versus a sell-off at this point. So this is why knowing what each one of your signals and patterns illustrate allows you to make a much better decision. UPST, when it gapped up out of the fry pan bottom, notice where you would have taken profits. Nowhere, because you're still trading up above the T-line. Just a very simple T-line rule that after a fry pan bottom breakout, or even in a fry pan bottom, as long as you stay above the T-line, you stay long. in QFIN, we were watching to see if it would get up through the 50-day moving average, which it did today. So there's nothing you can do on this one except stay long as it stays above the, not only the T line, but it's still staying above the 3T line. And probably would even use the 50 as a stop. If it came back down through there, then now you have to watch to see if it's going to do a bobble type pattern. Still keeping an eye on Marin because of the fry pan, and it did a bullish harami today. Let's see if it can start the next wave to the upside. Pretty much a steady eddy on CVM. Make this a little bit smaller. That slow fry pan bottom up through the 50 with a doji sandwich. Just a simple stay long as it stays up above the T line. Let's see what else we got here. Oscar. This was a good indication that if they started trading this lower, they were coming back at least to test the 50. You wanted to see it hold the 50. So breaks through a resistance level, comes back to see if it's going to act as support. So you would have put your stop just below the 50, because logic says if they didn't bounce it off the 50, they were taking it lower, possibly back to the T line. So everything that we look at on these charts is just pure common sense. So I bought some calls today on INMB. Remember, we recommended this as it broke out through the 50. It's been acting well. Did a bullish engulfing on Friday. Today it opened positive. Now the alert here was, wow. Well. It was breaking through this level, fry pan bottom. So the question was, why would you buy something that is gapping up in the overbought condition? And the answer was because it's coming out of a fry pan bottom. As long as it was breaking out to the upside, it was telling us that this level wasn't acting as resistance anymore. But when they backed it off as a shooting star, that told us exactly what was happening. They weren't staying up through this level. It should have been closed out on the close. Or if it opens lower. Now, if I recall, let's see. It closed at 28.70 or 27.85, and currently it's trading at 25.40. So if this opens lower tomorrow, that told you they double topped, failed up here. So just very simple analysis of when to get out of a trade. The biggies like Amazon also has this little J-hook type pattern that came up through the resistance level, came right back to see what the resistance level is going to do. It's acting as support. You could still be buying this with the anticipation your first target is up here at the fill in the gap, and then if it breaks, it's trying to break this level right now, you could have a wave 3 in progress. On INMB, would it have been sold 2 candles back? You still didn't close How come this just changed dramatically? Because I typed in the wrong symbol, that's why. INMB. No, you wouldn't have had a, you still didn't have a sell signal. Yeah, you still closed above the 3T line. So you didn't have a sell signal, and you didn't close below the T line. I would have been a little bit shaky there, but the fact that they kept it up above the T line and then started bringing it positive toward this level again. And so, no, I would have still stuck with the rule that as long as you don't see a sell signal and a close below the T line, the green candles, 2 back, read the rest, would have been sold 2 candles back with a down open on this candle. Okay. Yes, you could have. So you might have sold it out here, but it still would have had the same analysis. You're in a fry pan bottom. You hold until you see a sell signal and a close below the T line. So that terminology right there is very important to let sink in. A close below the T line. Now, if you had closed it out, then you saw it climbing back up, telling you the fry pan bottom was still in place, you could have bought it back in this case. Now, there's some that you wouldn't buy back because they're not forming a or completing a pattern. They might be way up in the overbought area, it sold off, and now it came back up. You probably sold it off because it was starting to sell off in the overbought area. And when it comes back up, you just have to say, well, is this something I want to buy back? Or is there something in the oversold area that hasn't started yet that gives me a much better upside potential? Okay, let's see what I'm... Oh, and so let's take a look at some of the other biggies. Apple, as soon as it broke out through this consolidation, you just stay long. Netflix, there's your J-hook pattern. Got a little bit testy right here, but it opened positive and continued to trade positive. So you still have to abide by the same rules. You need to see a sell signal confirmed. Now, sometimes a sell signal is a sell signal and a lower close. You can decide to close it out, or a lower close that closed below the T line. And that's also a function of what is the overall market doing. Are you seeing some profit taking in the stock, but the markets are still holding up? They aren't selling off. So you give it another day to see if it's just profit taking. So it's not like you're making every decision in a vacuum. All right, seeing a potential sell signal, a shooting star. Let's see what it does tomorrow or the next day, because the market itself isn't showing any major sell-off. Let's see. And NVIDIA still looks like it's got the potential of a J-hook pattern, with the expectation if this is wave 1, wave 3 should bring you back up into pretty close to that trajectory right there. So these are things that you can visually analyze, just giving you a kind of a target. Whoops, I skipped Tesla. Here's another J-hook pattern on AUPH. If it opens positive tomorrow, telling you you're probably heading to the top of this channel. Now Tesla was another one that pulled back, and this is why it's so important to use the T-line as one of your indicators. Pulled back right smack dab to the T-line and bounced and did a hammer signal on Friday, and then they gapped it up through this resistance level, or this level right here. I told you, yeah, the T-line's still acting as support. Stay long. J-hook patterns, Caesar's Palace, nice J-hook. Las Vegas Sands, a bobble breakout situation. This one can be bought on positive trading tomorrow. YI, J-hook pattern off the T-line back up through the 50. I don't know what this is right there, so let's remove it. That's got the potential now of heading for the 200. Another J-hook pattern. So this is where you use 2 plus 2. 2 plus 2 is, if we know this is a J-hook pattern, you can see how it pulled back indecisively, right smack dab to the T-line, and then traded up. If this is a J-hook pattern, what can we anticipate? Wave 1 and wave 3 being the same, which means if this basically opens positive tomorrow, you can be buying with the expectation you're going into wave 3, and everybody else is also watching, not so much a J-hook pattern, but they're watching the fact that it's breaking out through that level. Okay, and J-hooks. You can see, observe the obvious. Came up through the resistance, pulled right back to the resistance to see if it's going to act as support. We could see immediately it did a hammer harami, bullish confirmation. What's the expectation? Everybody's now confident that it's going to hold up at the 200. Look for it to do wave 3. So the fact that we can see what everybody else is obviously watching, but we also know that it's a pattern, this gives us that much more confidence to start buying immediately, where everybody else is probably waiting for confirmation. Pen, J-hook, bouncing off the T-line. Where do you think the next target's going to be? I hate that thing. And OM, there's your bobble breakout, fry pan bottom, classic J-hook. If it starts trading higher, what's it telling us? If it's going up through that level, we more than likely have a breakout into much higher territory. All right, and the fry pans are working. Clove, big fry pan bottom today with a breakout. This one can still be bought. Fry pan breakout through this level in the 50 with a little trend kicker. Next target should be at least the 200-day moving average. And AMEH. There's your fry pan bottom. There's wave 1, wave 2. Now you can kind of anticipate going into wave 3. All right, some more of the biggies like Myrna. Oh, okay, sorry about that. A dog retrieval today. So Moderna, you can see the next wave starting. Now, here's things that you want to observe. If this is going to be a good, successful pattern, where should it go? It should go back up above this level. If it does a sell signal right in here, telling you they failed to get to the next high, that means it's now going to go into a consolidation stage. Now, that's our friends from Arkansas brought their dogs. Ear, kind of a little cradle pattern down here. That one, you got a kind of a scoop cradle. That one can be bought on positive trading. There's a wee little teeny gap right here at the 50-day moving average. AMC, I'm just surprised that this one keeps getting as much attention, but you can see it's in a fry pan bottom. I don't know, the movie theater's opening back up. Doesn't matter. I haven't seen a good movie at a theater in so long. And another fry pan bottom is OUNE. Look how it came up through the 50, supported on the 50. Everybody should be gaining confidence. That one you can be buying on strength tomorrow. Now I say that with a little bit of a grain of salt because the markets itself kind of look more toward the fact that they're probably going to be in a consolidation or a downside move here on the near term. Brooks, let's make this bigger. Doji. It's going to tell you which way they're going to go. They gapped it up through the 50. They actually came down and used the 50 as support, telling you the bulls are definitely in control. And pod, same scenario. Came up through the 50, showed that it was going to act as support. Good possibility they're heading for the 200. So when I say good possibilities heading for the 200, when they breach one moving average that everybody is watching, now you watch to see what the next thing everybody is watching, and we can see which pattern it might be forming to add more credibility that that next target is likely to be reached. And so this one I was illustrating because it was starting to roll over. It wasn't breaking up into new highs. So this would have been one where kind of segueing into September 18th, where if you took the mini spotlight training on when to take profits or when to go short, the longer training session is going to take that information and kind of enhance it. So you're a lot more, what do I want to say, a lot more adept at analyzing when it's time to come out of trades that might not be working, even though they haven't shown a confirmed selling. But where you can take that money and say, all right, the probabilities are going against me. Let's move this money someplace else. That way you're not kind of guessing whether it's going to go up, down, or sideways. Okay, a few were pointed out as good shorts. ROL, Rollins, bearish left-right combo, bearish engulfing, close below the T-line. Look for some selling in this one. PTC was another one pointed out. Observe the obvious. A bearish engulfing, in this case at the 34. And then another bearish engulfing that also used the 34 as resistance. What can we kind of anticipate from this chart? We're probably heading back down to the bottom of the trend channel. And Bed Bath & Beyond. Oops. You had a trading channel. Let's put that. You also had a kind of a parallel channel. And you're sitting right there with a bearish engulfing gap down through the 200, which is what everybody else is watching. Now, if they're watching the channel, if this opens lower tomorrow, you can start shorting it. And you can stay short for the short term, at least, as long as it doesn't come back up through that support or that support level. We recommended DNMR today based upon a positive open and trading positive, giving you a double doji setup. But the fact that they went the other way now gives you a completely different scenario. That they weren't breaking it out, they were breaking it down, a failure right here at the 50. You might get ready to short this one on weakness with the idea they're going to come back down into the channel. Big bearish engulfing signal on HYZN. Remember the simple trading rule from the Japanese race traders. The bigger the signal, the more compelling there's been a change of investor sentiment. ENVX. The bigger the signal, and look where it failed. Failed right at the level that everybody else was watching. So you got a bearish engulfing, failing at the 50, closing back below the T-line, stochastics heading down. Where is this one going? Now it looks like it's back heading for the bottom of the channel somewhere down in this range. Look. And QSI. Wave 1, wave 2, bearish left-right combo. Where's the first target? Down here, which is 10%. But then it could also be a wave 1, wave 2 going into wave 3. Overstock. It was more of a sell signal before the close. But you can see where this trend channel is forming. You can pretty much draw parallel lines. Whoops, so much for that. If this breaks down to this level, which your stochastics said you had that good prospect, another wave 1, wave 2 going into wave 3. So the pattern setups become much more easily recognizable when you see a pattern. For example, lithium, you can see the wedge pattern. That was our kind of our breakout level. Now it seems to be coming back up through that level. And that was the same analysis that we're just identifying what everybody else is watching when there's kind of a pattern setup, and we can see it more enhancedly There's your berry Shirami. You're still in the wedge. Now they've broken through the bottom of the wedge. So anytime we can see a pattern that everybody else is watching, it makes it much easier to see which way things are going to go based upon the signals that are forming. Well, got lines all over the place here. Well, how come I can't get rid of that? There we go. This is QuantumScape. Now you can see the stochastics haven't gotten quite to the overbought area. They're rolling over, but you're still in between the T-line and the 50. So if you've bought this long for longer term, if it starts trading back below, you close it back out and wait for the next buy signal. Let's see. No. You can see the grains have been selling off. This is corn. This is soybeans. So same scenario. This chart looks just the same as you would find on a stock chart. And look at cattle. Ever since it closed back below the T-line, kind of doing a berry scoop pattern, he just stays short. Now you're a little bit more attentive here because you're down here in the oversold area. So you just watch a little bit more diligently for reversals. So right now, with the market tentative, you want to stick with the patterns. They're going to give you much better probabilities. Food should be getting cheaper, you would think so. Yep. All right, I think that's about all I got tonight. And it's because I think we're in a indecisive stage of the markets where things could get ready to start turning over. And if that's the case, that's where you want to be a little bit more aggressive on the short side. All right. I guess that's about all I got for tonight. Are there any general questions on candlesticks? The 3T line works in conjunction with the T line. It has two elements to it. One, it becomes more relevant the further you start moving away from the T-line. So obviously right now, we would put a safety stop on Netflix if we were long Netflix at the 3T line, and which also corresponds with the open of today. The logic says if it comes back down through there, where's it heading to? Back to the T-line. Secondly, you can use the T-line as a confirming indicator that, you can't see it in here, but you can be more ready to buy when you see buy signals and the T-line coming up through, I'm sorry, the 3T line coming up through the T-line, just as an additional conversation or confirmation. Saki, no, not a market crash, probably just some selling off. We don't know. Now everybody and their brother is saying, oh, we're due for our 5 or 10% market pullback. But that same analysis has been out there for months now. Everybody's waiting for a big pullback. So if you've been waiting for a big pullback, not doing anything, waiting for that big pullback, you've missed out on lots of good, profitable trade opportunities. On OM, would it be too early to buy as it closes over the T-line, but having the 50 and 200 up nearby? I guess my question, do you risk buying so close? Well, John, my 50 and my 200 are right here. Up nearby. Closing above the T-line. So are your moving averages the same as my moving averages? But the 50 and 200 up nearby. I guess my question is, do you risk buying so close before the average is resistance? Are we looking at the right chart? You consider the averages with heavy weight. The reason that we're considering the averages is we're seeing exactly what everybody's doing at those levels. We're not using those levels to make our decisions. We're using those levels to see what everybody else is doing, making their decisions. Or that's not the right way. We're watching to see what everybody else is doing at those levels, and then we can pretty much assess what their decisions are. So right now, from this one, we can tell they didn't resist at the 50. They did resist at the 200, but now they've decided not to. That tells us they're buying at the 200. We're not using this to say, all right, we're going to watch to see what our signals tell us at the 200. The signals are telling us what everybody else is doing at the 200. Is a consolidation after a move up the same as a J hook? Not necessarily a J hook. Which ones? Yeah, that wasn't it. Chad, no, it doesn't necessarily have to be making a J hook. It might just be moving sideways at a resistance level until they break through. It could be a J hook, or it could just be a breakout. Are there rules to cover exiting a long during the session when trading poorly? And let's see, are there rules to cover exiting a long during the session when the trading poorly and before the close? When trading poorly, yes. For example, whoops. If you can see this, well, let's say this or this, whatever way you want to do it, the fact that they gapped up through this level and traded higher, dang, how come I can't do that? Did it again, son of a gun. So you can see where the top was in here. In this range and this range. And what was this telling us today when it was trading up near the high end of the range? Telling us they broke out through that level. Well, what did it tell us when they closed back down here? They didn't break out through the level. And not only did they not break out, but they did a gap up shooting star. So had this closed right here, or even here, it wouldn't be a sell signal in the overbought condition. Let's make this bigger. So if it closed up here, even though it didn't break out to that level, it wouldn't be a sell signal. If it closed here, it wouldn't be a sell signal, just a bullish candle. The fact that they did a shooting star gives us a lot more clarity as to what's going on in investor sentiment, but they may have failed this because this is a signal. Now if they open it lower, and as I say, right now they were trading it back down in this range for whatever reason, if you stayed long. So here's one where you might flip to your 10-minute chart. This pretty much held up until the end of the day where it started selling off pretty hard. And now it's trading down in this range on the 10-minute chart. So there are times, yes, that if you start moving too far away from the T-line, make a spot that says, all right, this is either trading up or it shouldn't trade back below the T-line. So that's where I put my stop. Did that answer the question? There are times where we can get prepared to close out a position. Now this one would have been a little bit hard to recognize because it was a gap up out of the fry pan bottom and didn't create a sell signal until the end of the day. So if I was long, which I bought a small position of calls this morning, if it opens lower tomorrow, I'll close it out and move on to something else. Now I can see what is consolidation. Oh, that's consolidation. And that's not necessarily a J hook. That's just consolidation. Consolidation is they've moved it up fast, and now there's profit taking, there's buyers, there's profit taking buyers. Now, when that's over, you can see the new strength. Okay. Would you call that a breakout? No. I just call that continuation of an uptrend. A breakout is when you see something substantial. That's just uptrend, consolidation, more uptrend. Unfortunately, this one I would call a breakout. Because look where they gapped up. That's where you can see the pattern began. That was a breakout until they got back or did the shooting star. Did we do gold? I don't think so. Let's see what gold is doing. That's the December contract, and that doesn't look real good. I don't know if there's ECAV. Yeah, so gold is selling off pretty hard. Which means the gold stocks are starting to sell off. Okay. I guess with that, Jim, go ahead and do the double line. And in 3.7 seconds, do the next double line. Neil, no. There's a difference between profit taking and a reversal. The fact they did a shooting star, if they are open it lower tomorrow and start to trade it lower, that is a reversal. That's not profit taking. Profit taking, I guess you can put into the classification of when you see things pull back indecisively, you know that's profit taking. SLI, that's gotten a little bit squeamish here. This one also needed to open positive and trade positive today. The fact that they've opened it lower, that was not good. Especially, looks like it closed below the low of this signal. I would have closed this one out. Now what I would expect is to see if they pull it back to the T-line to see if that's going to act as support. That's a nice fry pan bottom. Target, yes, is the 50. We did Oscar. That's an evening star type signal. I would have closed this one out today even though it didn't close below the T-line. Because that's an evening star signal. Failure at the 50. Stochastics rolling over. To hold on to that, now you're hoping the market's open strong tomorrow and this opens strong. That just told me up here in the overbought area, let's close out the position even though it didn't close below the T-line. Now, you could go short. But if you go short after this bearish harami, you just watch to see what happens once it does hit the, comes back to the T-line. Far-fetched, that one you could be going short on weakness, yes. And Chegg, that one you can be going short. Observe the obvious. Came right to the 200. It wasn't that it was a coincidence that it came to the 200 and sold off. It's that we could observe what they were doing once it hit the 200. So you could short this one, yes. B big is still a good chart. You stay long. Lithium we've already done, Henry. It needs to stay above the wedge breakout. ATER. Another one, if you're long, you can stay long. Observe how they've used the T-line as support. RLX, you stay long on this one. That's a good chart. APP, that was another evening star type signal. So you can see that there, uh-oh, how did I do that? Remove that. You did an evening star signal in the overbought condition and a close below the T-line. Fairly simple analysis. You would have closed this one out. That was an APP. On Freeport, that's a nothing chart. Would not be long or short this one. No direction to this one. And KPLT, a second failure at the 50. If you're long, it has to open positive and trade positive. If it opens lower tomorrow, I'd close it out. You can see that it failed at the 50, which continues this current downtrend. And CPNG, that's a morning star signal. You can see the buying didn't confirm. So you had a morning star signal, didn't confirm, and a second morning star signal. What do you conclude from all this? This is where the buyers are stepping in. And TTCF, that was your big. So here's another case where you were in the overbought area. It opened positive and traded up here. Look how far away you were from the T-line. So you had a couple options. One, you could have gone to your 10-minute chart, or two, you could put your stop at yesterday's open. If you were ready to go short, if this opens weaker, what do you got? A bearish doji sandwich, at least coming back down to test the 50. UPST upstart just keeps right on going. You stay long, but you're starting to move away from the T-line. If you're long, you put your safety stop at today's open. Car dial, not a very old one. Right now you stay long. Etsy. Etsy, all you can do is stay long as long as it stays above the T-line. At lunch, I said win was a no. I said win was a no. Was that? I don't know why I would have said no. I don't know why I would have said no, Chad. At lunch, you said win pattern. Oh, maybe I wouldn't be a buyer of this, but if I was long, I would just stay long. So, no. The no probably was, would I be buying here? No. Just because there's a lot of better looking charts than this one. Daku, you would have been out of this one. You could go short on weakness, yes. But that has no direction. So if big bearish engulfing, if it opens weaker with the market opening weaker, you could be shorting it. And Cassie, all you can do here is stay long. Just make sure your volume is pretty good. NVIDIA didn't do a sell signal. It's just backing and filling. It did kind of negate a J-hook type pattern to maybe just going into a slow uptrend if it stays above the T-line. Yeah, I don't know where win was, but it didn't look like it was below the 50 because at noon time it looked like it was above 104. And we did it at late, so it was like 1 o'clock right in here. So I don't know why. Yeah, I may have just said I wouldn't be buying it. I can't remember. Okay, in Las Vegas Sands, That's a bobble breakout potential. MMAT never got started. It's, well, they never got started. You still kind of have that J-hook pattern above the 50. You can stay long on this, but still use the T-line as your stop. Double doji got that potential, yes. So if I was long, I'd probably use today's low as a stop. If it comes back down through there, it's not going in the right direction. There was another line on your chart at lunch. Maybe the 34? No. Let's take a quick look. All right. Huh. That looks like the 50 is... Oh. Maybe I said I wouldn't be buying it here because it was right at this resistance level. I wouldn't be buying it right then. I'd be more apt to buy it on positive trading from there. Let's see, ARCT, nothing wildly exciting. So here would be what I would be doing. You can see there's kind of a little resistance level right here, but it is staying above the T-line. Now, if I was long on Friday, it would have to have opened positive and traded positive, which it did. I wouldn't be going long now until it breaks through this level. All right, so all right. So again, we can see there's really no powerful force to the up or downside. If it traded lower tomorrow, I'd probably close it out and not pay attention until it does break out through that level. Okay, be careful. This told you there was lots of indecision. Now they've told you which way they were taking it. So if the markets start trading weaker, it will be important to see whether the Dow can support at the 50. If it breaks through there, it means you definitely want to be more oriented toward the short sides. These are the type of things you want to go after, the ones that have the strong downtrends to them based upon either a strong signal or a gap down. Okay, it is fall. We will be doing more Tuesday and Wednesday night training sessions because when the weather gets cold, we can't go out and play. So, oh, I think we did that one, Bob, didn't we? KP tail, yeah, we did that one. It needs to open positive and trade positive to stay in it. If it opens lower, they're still in a downtrend. All right, everybody, have a good evening. We will see you bright and early tomorrow morning. We'll see you then.